Guys, how's it going? As of I guess September 11th 2018, I'm pre-recording this video. I might do another recording in the future, depending if stuff changes. So I might be making another video and might not even release this video. But if you're watching this video, if I do release this video and you're watching now, it's gonna be 3 or 4 days behind the most current news that's on the market. So I'm gonna start off with these 3 videos. These if you want to better really understand these companies, these are the 3 recommendation videos I watched. The most recent, they're like within a month. I think some of them were within 2 weeks of each other. So if you really want to better understand FSD Pharma, then check out these 3 videos. I've watched this one twice. This one twice and this one once. They were very informative videos. So huge within, I guess, a week, August 30th to September 10th or September 10th. So within, I would say, a week, this stock rose probably like 200% or 300%. Wait, 20, 40, 60, at least 300%. But if you knew about this company like way back when, like around, you were capping this stock around June, and you wanted to hold on, this company went public on May 29th. If you bought it at this lowest point, you would 7 times your money right now. But like, who really would have gambled on this company? Like, I mean, I'm gonna get into it, but this company has 1.3 billion shares. I mean, granted, this stock is traded like a lot of people are trading it back and forth. Like, the volume on it is ridiculous. It's like 140 million shares. Like, recently it traded over 1 billion shares in like a week, in 5 days. It's crazy. And like, all they really have right now is a 24,000 square feet facility that they're growing out of, and only have a cultivation license. They have no medical patients. They have a 24,000 square feet facility. Well, in the craft building that they were building, they bought, they only have 24,000 square feet of growing space in that 830,000 square feet facility that they're growing out of. So they're producing about 2 or 3 thousand kilograms of cannabis. And yeah, so I mean, they're not really producing a lot of product, and this company right now is worth $884 million. So it's kind of overvalued. Unless the entire market has a really big rise with this company, then I think this company seems extremely overvalued. I mean, back when it was 7 or 8 cents, maybe not. Or when it was 17 cents, maybe not, because it was like, I think two or $300 million, which is a little overvalued. But right now, it's just gone parabolic because of the whole cannabis space going crazy, and the fact that this stock is it was so cheap to trade, around 15 cents, that it was caused the stock to easily rise a lot in a matter of like a week, or less than, I mean, a little bit more than a week. It's crazy how much the stock has ran. I probably would not be a buyer, but if you were to buy the stock, treat this as a trade. Treat this as a day trade. Treat this stock as a day trade or even a swing trade, but do not long term this stock. You probably will lose a lot of money if you invested into the stock at this point and be a long term investor. You're gonna lose a lot of money. But if you treat this stock as more of a trade stock, then maybe not. Recently there was some news that came out which was kind of interesting. Dr. Raza, I can't even say it, was offered 40 million shares. That would equal to 40 million shares at 13 cents per share. So they basically gave her $5.2 million. They gave this person or her, whatever, I don't know if it's a male or female, but this person is getting $5.2 million to try to list FSD Pharma onto the New York Stock, the NASDAQ. And according to Sean, in order to get listed on the NASDAQ, you need a price tag of at least $3.50. US, that's US, and this stock has billions of shares. So at $4.50, so this stock needs to go up to $4.50 Canadian. That'll make it $3.50 US. In order for this stock to go up that much, the company would have to be valued at $4.5 billion for a company that has 28,000 square feet of current growing space. I mean, granted, they are expanding, and Oxley is working on the expansion for 50% of the product capacity once the 800,000 square feet facility comes online. So I mean, I don't really, yeah, but like, she's not gonna be able to exercise this unless the stock price is 74 cents, and that they actually manage to list on the NASDAQ, or they merge, like they get an arrangement or a merger to get listed on the NASDAQ. Basically, she's not guaranteed $5.2+ million until he or she gets this company listed on the NASDAQ. So that was kind of interesting news. If the development changes over time, I'll let you guys know. They do have a pretty good, they have an asset for this company called Canna Biotech. They own 25% of the company for $17.6 million. The company is currently building a 625,000 square foot indoor growing space. So in Quebec, by the way. So I don't know if this company even has enough to build out. Maybe it's going to be in phases. But yeah, they're building a really big facility and they're going, and this apparently on the news, this company will eventually go public. So I mean, I guess this is a decent piece of asset that huge FSD Pharma has. I don't know why I have this up, but okay. Large scale, oh yeah, okay, this news article relates to them going on public on May 25th, 2018. So yeah, went on the CSE. I don't know why I have this one up. So this is the investor presentation. They want to become the largest hydroponic indoor cannabis facility in the world. So according to FSD Pharma, they said that hydroponic is the best way to grow cannabis. It will grow the most high quality products, and they're doing it indoor too. So the combination of hydroponic and indoor, they say that they're gonna have top high quality product. They're not saying that they will have the best product. They said that they're gonna have high quality product. And this is interesting. This is very interesting. This is the catalyst. The big catalyst is that they think that most of the growers that focus on greenhouses are gonna grow low quality products, and their product will sell better because it's high quality and it's hydroponic and indoor. So That's what they think. So right now they have a cultivation license. They had a cultivation license since October 2017. Their phase 1 expansion will be a total of 820,000 square feet, which Oxley is building for them for 50% of the product guaranteed. They have a $35 million cash and no debt, so that's okay. I mean, that's decent. And the phase 2 expansion target, I honestly believe that they will never actually build this. I think they put this into their investor presentation so they can show investors, hey, we can potentially be the biggest producer on the planet because we have, you know, at one location, because we have a total of 4 million square feet of indoor facility. I don't think they're gonna, in order to build this, they're gonna have to raise more money, and they're gonna have to build the facilities from scratch. And to add another 3 million square feet, that's a lot of money. So it's very hard for them to achieve something like this. I mean, it's possible. I can't see the future, but by the time they even finish this facility, everyone's gonna have so much growing space that it would be murder for them to even expand at that point, because like there's just so much cannabis in the product by the time they even finish 820,000 square feet. Right now they're expected to finish 240,000 square feet by the end of the year, so they'll have about 250,000 square feet of growing space by the end of this year. So by mid 2000, by spring of 2018, they'll be at full production capacity for 240, and the 800,200 square feet will probably almost be complete. So I say by mid next year they'll have 820,000 square feet of hydroponic indoor growing facilities. If they can sell, if competition is not tight, and if they can manage to brand their product very well, and their products sell better than Canopy's and Aurora, then this could turn out to be a really good investment. But I don't know. It's by the time they have this up and running, the 820,000 square feet, they're gonna have a lot of competition. So it's a little risky from that perspective. So like I said in the beginning of the video, treat this as a trade. Don't treat this as a long-term investment. You probably will get hurt. So absolutely be careful when investing into this company. So this was interesting. I didn't know that Alpharia had they bought out a Heinz company. That was kind of interesting. Let's see. Huge. Okay, this is like, I guess all the stuff, the location of the facility, how much plant and parking space and everything on the facility. They plan to have everything, like they plan to have their entire growing capacity in one location to save on cost and money. So that's this strategy, versus Aurora and Canopy having locations kind of all over the place. Well, Canopy has it all over the place, while Aurora has it in strategic locations. Maintaining current infrastructure, praise. I guess the facility is close to a railway line, so they can transport the product easier and cheaper, I guess. Electricity is actually one of the biggest problems they have. According to the interviews, they are trying to scale back and trying to reduce the cost and try to make it more efficient. But electricity right now is more expensive in Toronto compared to Quebec. So the electricity is one of the down factors, but I don't even know why they have it here. They're not advertising low cost. Like T-Guard advertises low cost electricity rates, but they don't really advertise that. But they do say that they're gonna try to bring down costs as much as possible. I guess the facility is already well secured. It has fencing. It already has sewage pipelines, which, you know, so the facility is already pre-built. All they have to do is clean it out and retrofit it so they can grow product. Like, I remember I said that indoor cannabis is better than greenhouse cannabis. This is like, some people said that, you know, that's the reason why I don't like Alfira, because Alfira is too focused on greenhouse and they're not focused on indoor facility. I mean, they did buy out Broken Coast, so that's the one thing. The advertising saying we're indoor, we're hydroponic, we're gonna grow high quality products, and that's why people are gonna want to buy our products versus those outdoor, the greenhouses that other producers are growing. That is not important. They are comparing market caps. They're saying a Canopy is 11. This is as of August 23rd, 2018. They're saying Canopy has $11 billion, and they have, you know, right now 2.8 million square feet. And future expansion of 6 million. Emerald Health has 625, 1.4. They're just comparing the market cap with what the capacity of growing is. Aurora is off. It's not 200. Is it 240,000? Well, the Aurora Sky is coming online pretty soon. So the Aurora Sky already is like at least 200,000 square feet. So that's a little off, but that's fine. Mary, look. They indicated that Mary has currently 217,000 square feet of growing space and 852,000 in the near future. Actually, I think that's actually 1 million square feet in the near future. So they're off a little bit on that. And they say that they have 25,000 square feet. They're worth $217 million. I mean, that's fair, I guess. But then they say, oh, future expansion. They'll never ever hit the 3 million, because that's gonna be like a 2020. If they decided to go for 4 million square feet by 2020, they're taking a major gamble, because there's gonna be so much product on the shelves. I mean, there's gonna be so much competition, so much cannabis products grown by 2020 that it's gonna be a glut of oversupply in Canada, and margins are gonna go down dramatically, especially if you're not an integrated company and you don't actually sell your own products. So, and branding is they're gonna have to really focus on branding if they want to make this company into a leader, or at least a surviving company in the future. Anyways, they're gonna really need customers to really want to buy their products. They're gonna have to have high quality products, and they're gonna have to have good branding in order to manage to get people to survive, basically. So like I said, Oxley is financing 100% of the construction and build out of the 820,000 square feet. They'll have 240,000. Wait, the first 220,000 square feet is expected to finish in December, and with production by January. So by the new year, they'll expect to start growing in that facility. And they have stuff in the pipelines for drinks, tropical edibles, cartridges, vaporizers, and pharmaceuticals, so pills and stuff. So that's one of their focus is, you know, pharma. But then again, they only have $35 million of cash. So they're going to have to probably raise more money. They're going to have to find ways to raise more money if they want to get into like drinks and edibles. Especially drinks, because and they're going to have a lot of competition with drinks. Like T-God, Canopy, Aurora, you know, Cantrust. Just tons of people. So I would have to say FSD Pharma is very, very risky stock. I mean, yes, they could potentially 2 years down the road maybe survive and thrive because the management is just so awesome. You know, anything's possible in business. They could pull it off, but in my mind, it's kind of more risky to invest into this thing long term. High Tide is one of the, I guess, retail partners, distribution channels. It's good because they need retailers to sell the products. 31 retail permits in Alberta, with applications expected to submit in British Columbia shortly. So yeah, that's good that they have somebody supporting them for distribution. But it's kind of weird how it works because in order for them to sell product, they have to sell it to the government, and then High Tide will have to buy it from the government. So they basically need supply agreements, which that makes no sense. Like 31 like they have a partnership with High Tide, but they have to sell it to the government, which the government then sells it to High Tide. So it's not really a distribution channel. Maybe it's just, I don't really like. Maybe you guys explain it more to me, people who are experts at High Tide, I guess. They focus on science, and they have a partner with the Canadian Israel pharmaceutical company, so that's good. May work out for them. I have no idea. Can't look more into that anyways. And I guess this is it. All I have to say is the stock is extremely diluted. It's very hard for me to see the stock being listed on the NASDAQ unless they merge with another company that's already listed on the NASDAQ. But if there's some people who really truly believe in huge, you know, make an argument in the comments below, tell me I'm wrong and explain why, and maybe I'll take another look into this company. Anyways, thanks for watching. If you like this video, please give me a thumbs up. If you dislike this video, please give me a thumbs down. Subscribe for future updates, and have a great day. Bye.